As the stock market continues to fluctuate, anxiety levels for many retirees, as well as people close to retiring, have spiked. Some feeling as though their financial status is at great risk. Matt Mathias sat down with one local financial advisor today and has some advice for those people. Matt?
Yeah, thanks, Sean. Jim Lyons, financial advisor with Edward Jones, says there's no doubt when things go down, no one likes it and people can get nervous, but says it's a normal part of the investing process.
According to the U.S. Census Department, there are more than 70 million Americans who take part in employer 401k programs. But when it comes to your 401k, it can be closely tied to the market's performance. And with some people seeing a dip in their investments, it's caused paranoia when it comes to what they should do with their money.
The emotions of investing are tricky because your body is telling you to do something different than what you should be doing. But if you recognize that's the way it is, then you can be calm.
If you're close to retirement or are already retired, you shouldn't be relying on the stock market for income. Financial experts say people at this stage of life should be more conservative in your investments than if you were younger. You should be in the process of planning on taking some income from your 401k, rolling it over, or moving it to an IRA in your own name. Lyons says age-based 401ks are another good option, where you set it for when you plan on retiring and it automatically rebalances based on that. In those instances, your downturn should be a lot less than someone who is much deeper in stocks right now.
We've seen downturns in 2000. We saw a downturn in 2020. We saw one in 2008. And then we've seen this of this magnitude. And you want to make sure that you plan for them in advance because you know that they're going to happen. What you can control is the diversification in your account, so how much stocks to bonds you have, and then the quality of the investments that you have. And how you determine good quality is just how they perform versus other investments that do what they do.
The University of Michigan's consumer confidence interval shows a 12-year low for the month of March, meaning people clearly aren't feeling good about the market. But that can also be an opportunity for riskier investors.
Lyons says if you're a young investor, though, it's a good time to save and invest in long-term options that can spring up after the market bounces back. Jen.
Good advice. Matt Mathias reporting tonight. Thank you, Matt.